Today's market is flashing a rare oversold bounce signal, indicating a potential reversal. We've identified a 20% disparity in SOXL and SOXS funding flows, a critical metric the lab tracks closely, and we're analyzing its impact on SMH's sector performance. We're seeing a significant move in the Direxion Semi-Bull 3X ETF, or SOXL, up 17.95% today. The structural force driving this is the earnings cycle, with semiconductor companies reporting strong numbers. Looking at the top holdings, we have MU, Applied Materials, and NVIDIA, with NVIDIA's strong earnings report being a key driver of today's move. MU's memory chip sales are also boosting the fund, while Llama's semiconductor equipment sales are supporting the sector's growth. Visual, NVIDIA's earnings chart shows the impressive growth. The combined exposure to these companies means SOXL's risk profile is heavily tied to the semiconductor sector's performance, with a high potential for volatility. At the lab, we examine the Direxion Semi-Bull 3X ETF, or SOXL, with a critical eye. With an expense ratio of basis points, we question whether the fee is justified by its return record. The top 5 holdings, including MU, AMAT, NVDA, and AMD, each at 0%, don't provide meaningful insight into the fund's composition. Notably, the top 5 holdings represent 0% of the fund, indicating a highly diversified portfolio. However, this diversification claim may be at odds with the fund's stated strategy. The fund's YTD return of plus 4,940.8% far exceeds its 3-year average of plus 32.1%. We're examining the Direxion Semi-Bull 3X ETF, or SOXL. The technical setup, with an RSI of 41.0 and MA20 and MA50 at $47.91, signals a neutral momentum direction, indicating a potential pause in the uptrend. The current macro narrative, fueled by headlines about trade uncertainty and tariffs, suggests a bleak outlook for the sector. However, the lab disagrees, as the sector's fundamentals remain strong. Visual, SOXL chart with RSI and MA indicators. We believe the market is overreacting to short-term noise, and the fund's impressive YTD performance of plus 4,940.8% supports our view. The lab's position is that SOXL's growth driver. We at the lab believe the bull case for SOXL is driven by the strong product cycle of increasing demand for artificial intelligence and 5G technologies. However, the bear case is rooted in concentration risk, with top holdings potentially dominating the fund's performance. Visual, SOXL holdings chart shows a relatively diversified portfolio, but we still see risks. The lab verdict is that SOXL's upside is contingent upon strong earnings from semiconductor companies. With an AI ETF score of 42 out of 100, we're cautious. The current RSI of 41.0 and bearish MACD momentum suggest a potential bounce, but we're watching the $45.51 support level closely. We conclude that SOXL's performance will be shaped by the inter. We're seeing a significant move in the Direxion Semi-Bear 3X ETF, or SOXS, down 18.22% today to $39.86, driven by the Fed's decision to maintain a high Fed rate of 3.64%. The top holdings, including short positions in NVIDIA, MU, and AMD, are key drivers of this move. For example, NVIDIA's recent earnings cycle is a major factor, as its performance has a direct impact on the semiconductor sector. Visual, NVIDIA price chart. As we examine the combined exposure of these holdings, we see that SOXS's risk profile is heavily influenced by the performance of these major semiconductor players. This engineered investment instrument is designed to provide 3. At the lab, we examine the Direxion Semi-Bear 3X ETF, or SOXS, with an undefined AUM and expense ratio, which immediately raises questions about the fee justification given its return record. The top 5 holdings, showing 0% in short semi, suggests a lack of actual sector capture. With a concentration of 0% in the top 5 holdings, the diversification claim appears to be more marketing spin than reality. The fund's YTD performance of minus 4,288.9% starkly contrasts with its 3-year average of minus 74.5%, indicating a significant mismatch in strategy. Visual, SOXS performance chart. Given these discrepancies, we conclude that the SOXS fund design is inefficient. We're analyzing the Direxion Semi-Bear 3X ETF, or SOXS, through the lab's technical lens. With an RSI of 53.2 and MA20 and MA50 at $39.86, the technical setup signals a neutral momentum direction. However, the MACD indicates bearish momentum. The current macro narrative, driven by trade uncertainty and tariff fears, suggests a negative outlook for the semiconductor sector, which SOXS is inversely tied to. The lab disagrees, as we see this narrative as overplayed. Visual, SOXS price chart with MACD indicator. We believe the sector's fundamentals remain strong, and the bearish sentiment is overextended. The lab's position is that SOXS is extreme Y. We see a potential bull case for Direxion Semi-Bear 3X ETF, driven by the global chip shortage, which could lead to increased demand for semiconductor products. However, the bear case is more compelling, with a significant concentration risk, as the top holdings dominate the fund's performance. Visual, SOXS holdings chart, shows the heavy weighting towards a few key stocks, making it vulnerable to sector headwinds. With an AI ETF score of 47 out of 100, we conclude that SOXS is a high-risk play. The current RSI and MACD readings suggest a cautious outlook. We're watching the $37.87 support level, a break below which could accelerate the downturn. The lab verdict is clear: approach SOXS. We're analyzing the VanEck Semiconductor ETF, or SMH, which moved 5.76% today to $383.40. The structural force driving this move is the earnings cycle, with semiconductor companies like Nvidia, TSM, and Broadcom reporting strong numbers. NVIDIA's recent earnings beat is driving SMH's move today due to its exposure to artificial intelligence and gaming markets. TSM's strong demand for 5G chips is also a factor. AVGO's diversified portfolio is further boosting SMH's performance. Visual, SMH's top holdings chart, shows the breakdown of these holdings. The combined exposure to these companies means SMH's risk profile is heavily tied to the performance of these industry leaders, making it. At the lab, we examined the VanEck Semiconductor ETF, or SMH, with a critical eye. With an undisclosed AUM and expense ratio, we can't directly assess fee justification, but we can analyze the holdings. The top 5 holdings, including NVDA, TSM, AVGO MU, and ASML, surprisingly represent 0% of the fund, indicating a highly diversified portfolio. However, this raises questions about the fund's ability to capture sector growth drivers. Visual, holdings chart, the fund's YTD return of 1,276.8% vastly outpaces its 3-year average of 41.1%, suggesting a potential mismatch between stated strategy and actual performance. Given this, the lab concludes that. At the lab, we're examining the VanEck Semiconductor ETF, or SMH. With an RSI of 42.0 and MA20 and MA50 at $383.40, the technical setup signals bearish momentum. The current macro narrative, driven by headlines about trade uncertainty and tariffs, is cautioning investors about the technology sector. However, we disagree with this narrative, as the sector's fundamentals remain strong. Visual, SMH price chart with MA20 and MA50 overlays. The lab's analysis indicates that the fund's performance, with a YTD return of 1,276.8%, is driven by its holdings composition, which captures the sector's real growth drivers. We conclude that the macro narrative is not accurately reflecting. We at the lab see a compelling bull case for VanEck Semiconductor ETF, driven by the growing demand for chips and emerging technologies like 5G and AI. On the flip side, a key bear case is concentration risk, with top holdings accounting for a significant portion of the fund. Visual, holdings composition chart. However, our analysis shows that SMH maintains reasonable diversification. Considering the technicals, with an RSI of 42.0 and bearish MACD momentum, we conclude that the fund's upside is threatened by global economic slowdown risks. With an AI ETF score of 45/100, we believe SMH is positioned for a bounce, given the extreme fear reading on the CNN Fear and Greed Index. Watch. Today's top signal is SOXL caution. If you found this analysis helpful, please subscribe, like, and comment below which stock you'd like us to cover next. Remember, this is for educational purposes only, not financial advice, so do your own research and consider that past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab. We'll see you in the next video.